Morning and welcome once again to yet another edition of the Multimillionaire Forum. This is a forum where we talk about a topic which we select from whatever is happening currently around the world, where we want to share some information, some idea that we want to share with friends, clients, investors, everybody else. Okay, so in terms of this topic today, we've spoken about a topic. We're going to talk about something called international investments. Standard disclaimer that I need to put up that this video is for educational purposes only, and we're not going to give any recommendation on any product or any service, but this is just a platform for sharing knowledge and ideas. So that's what we are intending to do. So today's subject we're going to talk about is why invest internationally, or why should we think about making an international portfolio, and why is this an important thing right now? In fact, it's not really now. Uh, it has always been a very interesting sort of a phenomenon. As retail investors, we don't really think about investing around the world. But in terms of institutions, these institutions keep investing around the world all the time, right? As you can see, there are institutions who will say that, there are analysts and institutions who will say that India is looking good, China is looking good, so and so country is having this kind of a developmental policy, and therefore we should go to that country. So institutions move very easily from one country to the other. And even when we are talking, bolte hue bhi bada आसानी से हम बोल देते हैं कि why is the Indian market going down? Because the FIIs are selling India and they are buying China. Well, very easily we just make a statement like that. But there is so much that goes behind this entire procedure of buying internationally. And there are ways and methods by which we can also do that. And we can also take advantage of things. So, but the number one reason to understand why international investing is good today is what we are going to show you in just a minute. But the other thing to understand is now it is possible to do that. See, it was a little difficult. There were products available, but now it is becoming that much more easier. So, which is why we thought we'll bring this subject to you. So, can you go back to the presentation and can you show me that slide? There is a very interesting piece of research which I found, and you'll find it very, very interesting. Can you go on to that link, please? Yeah, you can hit the link directly, or you can just change your screen share. So this is something which is going to tell you how different markets have been performing over a time frame. This is up. So you will see that at different times, different markets have performed in a different way. And it is not the same market which has always been on number one, always. Now, see, this is a very interesting thing. What you will see is, let's just, for example, filter in and zero in on any one particular country. Can you hover your mouse around something? Let's just stay with one, okay? This is, for example, let's just take CAN, Canada, okay? So CAN stands for Canada. Yeah. Now, as you can see, Canadian market in 2016 was at the highest. It was the highest performing market in 2016. But the rest of the years, it was all over the place. You see, in the same fashion, the New Zealand market in 2019, can you go to New Zealand, please? Okay, New Zealand. So as you can see, New Zealand, it was relatively a good performing market in 2011, 2014, in 2016, etc. But in 2019 to the highest. But then there were certain years, ek bar high hoke, then it went down to 20. The next year it went down to 13. So you cannot even chase this kind of a trend. That seeing that last year this market did very well, so let me try and invest here. It may work, it may absolutely not work. So, but the point to understand is that no one market is the leader in all the years, and which is what you are seeing here. So different markets come at different times and lead. Now, there's a very interesting case of, can you go to IRL? Is this Ireland? Or can you go to IRL? Yeah, this one. Can you just hover here? Now, this is very interesting. IRL is Ireland, I think. Okay. So can you just verify the code down? There are country codes written down. IRL. Yes, it's Ireland. Yeah, please go up. Okay. So Ireland. Now you can see Ireland for a long time, and for out of this 15-year data, almost 1, 2, 3, 4, 5, 6, 7, 8 times it has been. So that's 50% of the time. 8 out of the 15 times it has been in the top, you can say, one, two, three, four, five. Top 7 countries in terms of performance around the world. Very interesting market, right? I mean, Irish market. We never think about it in that fashion, but this is the data which is in front of us. And this is what makes everything very, very interesting. So what happens is, at different times, the proof of the matter is that at different times, different markets are leaders for a particular calendar year. Now, it would be amazing if we knew exactly which year which market was going to be the leader and we'd go and invest there. But obviously, that's not going to happen. So what we need to do is we need to be able to diversify. We need to be able to invest in different markets so that we can take advantage of most of these larger market movements. Correct? So having said that, look at where we are now. We are right now at the beginning of August 2025. And at this time, something very interesting has happened in the whole month of July. In the month of July, for example, the American markets hit their all-time high, life high, means it reached the highest point ever. We will show you some of these pictures, a little later in the presentation. But you will see that it reached its life high, all-time high. In the same fashion, the UK market also reached an all-time high. Even a market as much as Pakistan market has also, Karachi Stock Index is also at an all-time high. Okay, I mean, there's nothing good happening about that economy, but it's at an all-time high. In that fashion, there are lots and lots of markets, European markets, American markets, Japanese markets. Everybody's hitting these all-time highs. And in this whole period, in the last 1 year or so, Indian market has been at zero returns. We have been flat for one whole year. So if you look at Nifty, which was July 24 number and July 25 number, it's almost the same. In India, we've got zero returns, but elsewhere in the world, there has been so much more growth and progress. So let's come back to our presentation. Okay. So why should we really think about investing internationally? Number one reason is at different years, different markets are performing differently. So which is why it gives us global diversification, right? At some point in time, like I mentioned, Indian market did zero. But if we were in some other market, maybe we would have got a 10% return or a 15% return or 35% return in this particular area. The next challenge, and which is where we will play a role, is to identify which are the high growth markets which are likely to happen over the next year or two. It's not impossible. There are little methods by doing it, but these methods are largely technical and not so much fundamental, right? Why am I saying that? Is because the example that I just gave you, what would one think that is happening in Pakistan or the economy of Pakistan to sort of say that the Pakistan economy is booming and therefore the stock market is booming? Nothing really, correct? I mean, we already know that if in a country like India is going to feel the pinch of expenditure on a war, of course, Pakistan is going to feel the pinch even much more. It's not going to be a pinch, it's going to be a punch, rather. I mean, some time back, we also saw that Pakistan didn't have enough fuel in the fuel stations to fuel the cars. So just imagine, this is the situation, and the Pakistan Stock Exchange is at an all-time high. Okay, so it also tells you that institutions are the ones who are the largest buyers, right? So that we know. But institutions are thinking very differently than what you and I are thinking. And there is something that they are seeing. Now, institutions also have this very uncanny habit of doing a little more. Actually, let me correct that. Doing a lot more than what you and I know. And which is why when an institution enters a country, they bring like a tsunami of dollars and funds to buy that local market. And when they leave, they also take a huge truckload of money out with them, right? And which is why the market has its volatility. So that's the thing. So these people know which will be the high growth market. So which is the market which is likely to do well. And remember always, right? Stock market is a forward looking tool. So what's going to happen in the next 1 or 2 or 3 years is what institutions are making their decisions based. So therefore, institutions are buying, which means we should think that there's something large, nice, which is going to happen, or there's some appreciation likely to happen in those markets. And of course, geopolitical and economic advantage based on a country's situation. And The most important reason is why invest internationally is because now we can do it much more easily. Earlier, there were only some few mutual funds who could do it. They are still around, but that changes over a period of time. But now we can invest. It's not so difficult. In fact, it's quite easy. We'll talk about that also. So let's move. Let's just look at the landscape. Okay. In India today, our market capitalization is how much? $4 trillion. And we have about 2,500 listed companies in India, and we have close to about maybe 200, 250 odd ETFs in the market. This number keeps changing. It's very, very dynamic, right? And we are actually warming up to this ETF. Oh, by the way, we'll just talk about USA in a moment. By the way, I'm not sure if everybody understands what an ETF is. So an ETF is an exchange traded fund. Now, what that basically means is that you can buy that mutual fund on the stock market. So, for example, if there is a fund which is which is an enabler, let us say, for local investors like us, where we invest into a fund, of course, we can buy it through the mutual fund route also. But that same thing, we can also buy on the index. Well, let me give you a very simple example, Nifty. So if you today wanted to buy the Nifty index, you can buy the Nifty index fund through a mutual fund. Now, that same mutual fund would also offer you an alternative product, which is to buy the Nifty index on the stock market directly. And that is known as the exchange traded fund. It is a fund which is traded on the exchange. There is an NAV, or there is a price which is moving every minute, every second, and you can buy it from there. So if you have a demat account, you can buy the ETF. If you don't have a demat account, you can buy the fund. That is the principle on how some of these ETF products were made. So you don't want to just for one product, get into a mutual fund and open that mutual fund account. Maybe you have a share portfolio and you just want to buy one ETF, and that's how you can just very quickly do it from your equity demat account. And that's the logic. So come back to talk about it. So ETF is now, I'm just expanding that example. So the way I gave the example of Nifty, in the same fashion, you can invest around the whole world. So the way you can invest in a Nifty via the ETF in India, you can buy the same sort of an exchange fund, which is going to invest in American companies, or let us, for example, say NASDAQ. So if you wanted to buy all the companies in NASDAQ, there is a NASDAQ ETF which will be available in India. We can just buy in a single keystroke. You just buy it, and automatically your money is then invested in NASDAQ. You can keep it as long as you want, buy it today, sell it tomorrow. That's how beautiful and that's how powerful this ETF is as a concept. Mutual fund, of course, is a little slow in that sense. It has a little process to follow, but the ETF is fabulous. Now, look at America. So I had to give you this background to understand where we are standing compared with the largest market in the world, which is America. Our market cap is 4 trillion. USA is at 63 trillion at the moment. So it's almost like what, 15, 16 times larger than our market. Number of companies doesn't matter. They have about 6,500 across all their exchanges. We have about 2,500. ETFs, like I said, we have about 200-300. US has 4,500 ETFs. So through the US market, you can actually invest in any country of the world. And we'll again talk about how that will happen in a moment. Okay. But let's also look at the European markets and the Japanese markets. Japan here is, about 50% higher than ours in terms of market cap. Japan is at 6.5 trillion. It's just a number, just to give you a perspective. Okay. Number of listed companies, like I said, doesn't matter so much. Japan has 4,000 companies. We have 2,500. That's okay. But Japan has 400 ETFs and we have 200. But I mean, I'm sure, we are intending to do this session every year. Probably by next year, we will have more than 400 or 500 ETFs. That is the speed at which our market is growing in this particular section. So, it's a place to watch out. Okay, let's move on. Europe has about 3,500 ETFs, and Europe is at 24 trillion. So Europe, I mean, when you look at Europe as a collective, obviously it's 6 times bigger than us at the moment. Okay, so let's move forward now. See, what's happening here is these are the most obvious markets that we spoke of, right? These are the markets: USA, European markets, Japanese markets, very obvious. China market, very obvious. Okay, it's a great, fast-growing economy and all of that. But there are a lot of other markets also, which are not so obvious. They are not in your face. I mean, who would think about investing in a Hungary or a Greece or South Africa, Poland, etc.? But there is a lot of activity happening in these places also. And that's what we are going to actually try and dig out, so that you saw that grid, right, where everything was changing. But now we're going to show you something else in just a moment. So stand by for it. And just as a thing to mention, even Asia Pacific, even Asia, that is the whole of Asia, we have about 4,500 ETFs. So if you think about it, in totality, there is more than 15,000 ETFs around the world to invest. And a large number of those will be accessible through the European market and the American market. So let's move forward. Now, let's talk about, like I said, the Hungary and the Greece and things like that, right? So we are going to show you the last 3-month performance for some of these markets, and you will be amazed. Okay, so can we please put up that screen? This is absolutely mind-blowing data. Once you're ready, just put it on. But what you will see, and here it comes for you, right? You will see that, it's not always our Indian market. See, we have a tendency, because we are Indians, we will invest in India. And if you were living in Japan, you would think of investing in Japan. If you were living in UK, you would think about investing in UK, right? And can you zoom this a little bit more, please? But look at exactly what's happened as we speak, okay? Can you zoom? Can you do a Control Plus? Is it possible? So that these numbers become a little bigger. Yes, thank you. Yeah. Look at where we stand. Look at the number one market. Now, we are talking, okay, by the way, this is data as on today, as on yesterday, right? So as on yesterday, 1-year returns were 37%, and the stock exchange that did that was the Budapest Stock Exchange, which is Hungary. Okay, just imagine. So Hungary is actually number one market at the moment in terms of 1-year return. Last 1 year, greatest return, Hungary. Look at the next one, Greece, 35%. Third, China, 32%. Now, look, we may think what we want to think. Now, China is a little bit of a sensitive subject for a lot of us. Okay, China is a slightly sensitive subject. Not everybody wants to talk about China. I hope this is pinned properly. Yeah. So China is a sensitive subject. Some people want to deal with it. Some people don't want to deal with it. If you're an investor, someone might take a stand that I'm dispassionate about investing. Somebody might say, no, I'm very, very peculiar that I will only invest in ethical companies and good corporate governance and all of that. Or somebody might say, I will invest in Sharia companies. So there is a lot of that. But see, as an investment tool, there is China in front of us. So then it's a personal decision whether we want to invest, whether we don't want to invest. Politically, it's a different stance. Politically and geopolitically, what is happening is something which is beyond your and my control. So if you're looking at a pure investment case, we can do it, but obviously one has to take their own decision. So which is why I said China is a little sensitive. So we shouldn't, especially in the current regime where, with the India and China relationships, India and Pakistan relationships, and the fact that China supports Pakistan in most of the things. So we also obviously don't like whatever China is doing because it's against our national interest, and nationalists that most of us are, patriots that most of us are, we don't like to deal with it. But well, that's the fact. Okay, so that's the data, and which is why we brought the data in front. So therefore, as you can see, China was at number 3, and you'll see that in a moment. Even the market, like Germany, has done 31%. Japan, the banking sector in Japan has done 31%. Spanish index is at, Spain did about 29%. Can you make it bigger so that everyone can see these numbers? If somebody can't see, you can unmute and please let us know. But we're just talking. Yeah. This is really nice. Thank you. So USA did about 25%. The US is actually breaking records, right? Poland is done 23%, and this goes on. Now, can you please filter on an ascending basis? This is a descending basis, right? Can you do a 1-year return? Can you sort this on the other side, the lowest market? 1 year, not the 3 years. Yes, please. Thank you. This is Z to A. Can you make A to Z? Look at this. Friends, look at this. Our India is right at the bottom of the list in the last 1 year's return. So our small cap, last 1 year return, we are talking July 31, 24 to July 31, 25. We are down 5% on small cap, 3.5% down on micro cap, 2.5% down on 200. Our Nifty is 0.73 negative, pretty much at the same level. And 1st August, which was yesterday, actually the market went down even further. So all these numbers would have gone up by at least 1%. So this is where we are. We are right at the bottom. India, one of the fastest growing economies of the world. This is also a reality of the stock market, that right now the Indian market is down. Nothing to say that it won't be, the leading market the next year or the year after. But aise hota hai. Things, as investors, we know this better than anybody else, that this also happens. This scenario is a reality and it's in front of us. So again, one more reason, right? Why I said we should globally diversify our money. So you saw so many other markets give so many other good returns. And by the way, why were we talking about ETFs? I want to remind you again. The reason we were talking about ETFs is, what is the simplest and the fastest way to invest in, say, a Japan or a Greece or a Hungary? Just buy the ETF. What is the fastest way to invest in India, for example? If you were a foreign investor, say if you're living in some African country, or if you're living in Australia, and if you wanted to invest in India, what is the first thing that you would do? You would buy the Nifty ETF. Now, Nifty ETF is listed in their market also. It is listed in, you would buy GIFT Nifty. GIFT Nifty is our index, which is available for the whole world to invest in. So they would invest in our index. In the same fashion, the list that you saw, bring that list up again. That list is very simply telling you, just invest in the main index of that country also, you make so much more returns. And it's a reality in front of us. Okay. Now, what we are going to do is, we're going to try and find out now which markets. Ye to ho gaya, na? This is history. This 1 year return is now history. 365 days have passed. So this has become history. Now we want to see which is the market which is now going to do well, or which is likely to do well. So what we do is, first we look at the short-term trend. In the last 3 months, what is happening? So now can you do a filter on the 3 months and tell us which are the leading markets of last 3 months, Z to A? Okay, here. Now, as you can see, okay, the leading sector, see, we have done a comparison between, so we've actually mixed up the data, sector plus country. We have done that, okay? So you are seeing that the semiconductor particular index, PHLX semiconductor index of USA, in the last 3 months has done 35%. Yeah, very interesting. Now, watch this data. Let me just remove my drawings here. 1 second. Watch this data, 35% returns here. But in the last 1 year, it has done 13%. So what does this mean? Can you also just decrease the width of GHI column, so that, okay, can you just reduce the width one by one, so you can show the values there. Okay, just reduce them a little bit. Yeah, so that even the 6 month is 6 month and 1 year. We want the 4th one also to come. No, don't shake that. I didn't want to shake that. I want to see everything together in one screen. Can you go back, please? No. So you need to. Yeah. Just come closer. Yeah, and little bit more closer on the 1 year. Okay, that's good. Okay, that's fine. What this is trying to tell you is that this particular semiconductor index was at $100 last year, and now it is standing at $113. But what happened in the interim is, the index fell down by about 16%, and then from a base of 84 in the last 3 months, it has moved up by 35% returns, as you can see. This tells you that the annual growth, although it was only 13%, last 3 months, there is a lot of action happening in this space. A lot of institutional investors and global investors are interested in this particular sector. The same way, a lot of people are now interested in this Korean index, KOSPI, because this is at 27% versus 18% return in last 1 year. Okay, now this is again very interesting. Look at the third. I'm just giving you a few examples just to understand how to think of a good trend. Okay, look at S&P IT index. Okay, in America, the IT index in last 1 year has done 25%. Last 3 months is also done 25%. But what it obviously means is that the 100 rupees fell down to 97, and then 97 has moved up to, sorry, I'm reading the wrong one. The 100 rupees has kind of remained more or less steady to 100, and then right now in the last 3 months it has done. So actually, from April, May, June, and July, 3 months, S&P IT sector has done 25%, and 9 months before that it did nothing, because 9 months data is showing that the $100 remained at $100 here. There was no appreciation, which means something interesting is happening. Like I said a while ago, institutions have a lot more information, a lot more data, and they are moving money from one country to the other and one sector to the other like a tsunami. And that is what is happening right now in the IT sector of America. Okay, so on one side, you're seeing Donald Trump policies, which is telling people that, we don't want to hire Indians and we don't want to have things outsourced. We want to have the MAGA theme, make America great again, happening. All of that happening there. Maybe, we don't know. Sometimes we feel that these policies are counterproductive for America. Sometimes we feel maybe these policies might have some vision behind it. Who knows? Only time will tell. But the fact is, the stock market has already told us that something good is going to happen in American technology. So that's the answer which is in front of us. This is pure data, right? Now look at Taiwan, for example. Taiwan, same story. Last 3 months, it has gone up 21%. And the last 1 year, it has done 17%. So this data from 100 to 118 is nothing but Taiwan. Something interesting is happening in Taiwan also. So now these are clear, picture. This gives us a picture of what are the areas and pockets of growth, or what are the areas of pocket of high growth happening for the next next maybe a year, maybe 2 years. So this is the data which we need to kind of constantly monitor as to what's happening in the 3 months likely to go ahead. Okay, and we're now going to show you some very interesting pictures. Okay, it's going to give you a very different view of the world. So what is happening is, right now, we are seeing that data is telling us that in the last 3 months, there's been some action, right? But that's a very minor sort of a time frame. Last 3 months में सिर्फ ये हुआ है, right? What is likely to happen in the next 1 year or 2 years or 3 years? What's the trend looking like? Okay, so to do that, unfortunately, it's very hard to say or make a projection like that from any sort of data, from any fundamental data. This data, which I just showed you, is where you can make a decision that something good is happening. But can you make a prediction for the next 3 years? No. So history tells us that now we are going to look at some of these charts. These charts will give us some indication of a trend. It may fail 100%. So let's keep that as a back of our mind and a caveat that these charts can fail, the patterns can fail. But you will see for yourself that, broadly speaking, the indication that these charts are giving, actually they work out over a period of time. So now let's have back the presentation, and we're going to show you a lot of charts, going forward. Okay. We'll talk about execution in just a bit. Can we just move forward to the charts? Let's just go there. Forward, and we'll come back to execution now, since we are talking about opportunities. Okay, so now look at this. This is okay. Now we've also, there's one thing to understand. Okay, before I even get into the charts, one more clarification. We are talking of the broad market index. Okay, see, broad market means what? Let's talk about India so you understand what I'm talking about. Nifty 50 is talking about only the top 50 companies in India. In the same fashion, Nifty 200 will talk about the top 200 companies. If we talk about small cap, it talks about the companies which are ranking from 251 number to 500. That's basically how these different index buckets have been created. And when we say broad market, means if you look at the top 500 companies of India, then that is known as a broad market, or a very broad market kind of an index. Okay, it gives you a sense of the whole country's movement and how is the whole country looking like as an investment. In the same fashion, we also tend to look at S&P 500, which is the American broad market. We don't only look at the New York Stock Exchange, or we don't only look at NASDAQ, or don't only look at Dow Jones. Because Dow Jones, for example, has only 30 companies. But then if you want to see how is America doing, then you look at a much wider picture. So that's why broad market. Okay, that's what broad market means. Okay, now bring back that picture for me. So we're talking of all broad market indices. Wherever possible, we have tried to, and there are lots of pictures. Okay, what I want you to understand is these little blue arrows. Okay, that you see. Let me just sort of highlight a few of them. This blue arrow, this blue arrow. Okay, this blue arrow. Okay, so you understand what I'm saying, right? See, every time this blue arrow comes in, right now, it came here and then there was a bit of a rally. It came here, then there was a rally. It came here, then there was a rally. Okay, this rally was kind of, I'm just boxing it. It wasn't all that great, right? But this rally was good. This was good. Now again, there was a little bit of a box. See, I told you it can fail also, but this now here is a question mark whether it's going to be a box or whether it's going to be this. But as optimistic people, we will think that we are going to move up. So this is the Indian market. Okay. Now, how long is this rally? Right now, we'll just take an estimate. Okay. Can you please tell me what was this time period? What was this time period? What was this? Year 2009. You can unmute yourself and say because I can't hear. So 2009, and then what was this point? This point here, 2011. So friends, 2 years. Okay. So this is 2 years. In the same fashion, let's for example take this patch. Can you tell us what was this point here? This one, this point. What was this point? I can't hear. What? 2016. Okay. And then this point, 2018. Okay. So then that's again 2 years. So you see, you can estimate what might happen over the next 2 years. Again, this is just to give you an example. Okay. So there are a lot of charts. We're not going to spend a lot of time, but the whole idea is that look at the trend, right? The trend is like that. That's always the trend of any market. Very rarely and very unfortunate if you see sorry, let me kind of make a better drawing. Very unfortunate if you see some sort of a drawing which goes up like that, so it is still a trend, but a very flattish kind of a trend. It's not really a nice arrow that goes up like that, right? So it's unfortunate. You might see some market like that, but broadly speaking, you will see a market that at least rises at about 30 to this is about 45 degrees as we call it, geometry that we learned in school. So 45-degree charts. If you look at that and look at, there's a blue arrow here. It's indicating that maybe something good is going to happen. Right now, we are blinded, we are clouded. We cannot see the vision, but as the markets fall, you feel terrible, but something good might happen and it might happen sooner than we can imagine. So this is the background and this is taken India as an example. Now we'll go much faster with all the other pictures. Okay, go on next. Okay, look at this S&P USA. Okay, likely to move forward. Go forward. Next, look at this one. This is Nasdaq USA. Okay, again, it's showing that it's. I mean, by the way, I already mentioned, right? Nasdaq and USA has been highest ever in their life, so it's like making an all-time high. Next. Okay, this is USA. Next. Utility of USA. Next. Jane do next. These are all US sectors, consumers, utility, etc. Now, this is interesting. Stock 600 index of Europe is the European broad-based index. Look at the trend, okay? And here, it's kind of come here. We still don't have the buy signal here, but it is looking, it is looking quite nice. It is looking quite promising that it might be, even Europe might just kind of move up because it's kind of showing us a small little trajectory, which could translate into this. Okay, next. Oh, 1 second. Japan has already given a buy signal here. Topix 1000 is Japan's broad-based index. Okay, next. This is Japan's small cap index. Again, you have a buy signal that has come here. Next. This is banking sector of Japan. Again, there is a promise here. Okay, this is Taiwan. Wait, let me just remove my drawings. Taiwan, again, as you can see this little arrow. I mean, this is another buy signal. See, these are technical charts, but something might happen, which is nice. And you will see something happening for the next 2 or 3 years. It's just a projection mechanism. Okay, next. Korea. Yeah, this is Korea. Again, looks interesting. But Korea is quite flat, right? Go back to Korea, please. See, look at this is like a very sad period, right? I mean, this is probably 2008 and going all the way up to, what was that, 2021. I mean, it's a lot of years, right? This is almost like a decade, like a lost decade unfortunately, for South Korea. But then, and then this was obviously COVID. I mean, where is COVID? This was COVID fall. And then after this point, it looks interesting, Korea. We don't know. I mean, go on. Romania is looking very interesting again. Next is Germany. Like I said, Europe is looking interesting. Germany is already given a buy signal. Australia is in a buy signal. Next, Serbia. Serbia actually, it's in a nice little rally, and it's in a trend also. It may stop somewhere, but at the moment it's in a rally. Okay, next, South Africa index. Okay, again got a buy signal there. Next, Egypt, yeah, buy signal. Next, Hungary. Clear my drawings. Hungary is also given a buy signal. Next, Turkey is also given a buy signal, but Turkey has had flat periods. Uh, yeah, I mean, Turkey has had some difficult periods. I mean, this is just it's an academic study to just see how the world is looking at the moment, right? Go on. This is Greece. Greece is also showing that it wants to go up. I mean, Greece has had quite a nice, trend happening since post-COVID. I think the fortune of Greece has changed. But again, let us study Greece. See, Greece from 2012 to 28 years was a lost decade for. I mean, not 8 years actually. Look at this. This was the housing crash around America, and Greece fell from a level of what, 5,000, 6,000 to a level of 500. My goodness, what a fall this has been. It's been a catastrophic fall. Um, 6,000 to 600, it's almost 90% fall. So Greece index fell 90% between 2007 to 2012. And then from 2012 to 2021, my goodness, almost what, 12, 15, 14, 15 years of a sad period in Greece. But well, anyway, now it's looking interesting, right? Chalo, next. Okay, this Germany again repeated. Spain, yeah, Spain is also looking interesting right now. Poland also, see, same story. Like, see, Poland, Greece, I mean, all the same story. Almost 15, 20 years of nothing. And now in the last, since 22, something interesting is happening in that zone. Okay, next. This is semiconductor USA, which is the highest growing sector. Okay, next. UK. UK market, like I mentioned a while ago in my presentation, the UK is also making an all-time high. This is a live high that the FTSE 100 has made. Okay, next. Belgium index. Okay, looking very good. Next. This is Italy. Italy has been in a very bad shape for so many years, but now it's looking better. Okay, that's it. Okay, so as you can see, there are so many opportunities. And you know what conclusion I'm making out of this, and which I think anyone would make? If there are all these markets of the world, the whole world is giving some sort of a buy signal. The whole world is looking good. But reality is that the world is in a very difficult situation right now. I mean, there is war happening. There is Russia-Ukraine happening. There is Iran and Israel happening. There is India-Pakistan tension, India and China, US and China trade war happening in the most severest of form. And US is pretty much penalizing everybody for everything. So nothing is looking good. So how is it that the whole world is giving a buy signal on a slightly longer trend? So like I said, I don't have the answer to that. And the answers will arrive. But which is where, two things, we are mixing two things together. One is the short-term 3-month data, which is saying that there is some action happening here. And then you look at a long-term data. I mean, a long-term data we don't have, but we look at the chart and see that long-term something good may happen. Like I said, again, I'm saying, third time I'm saying, it can fail. But in 3 months, if there is some action happening, and if the long-term is looking good, maybe there is an opportunity there for us, right? Now we go back to execution. That how do you exactly make use of this opportunity? Okay, so go back to the presentation. Take me to execution. Again, now you'll find this thing very interesting. Execution. We have two methods broadly of execution. One method is via India, and the other method is via America. Okay, so very simply, let's talk about India. We have three broad roads in India to invest here. One is the mutual fund route, which you are very well aware of, and maybe some of you have even invested in the past through the Indian mutual fund. The problem at the moment is that sometime back, RBI came out with a diktat that you can only invest up to this limit. So it seems that we have, as a country, reached that particular limit. of making international investments via the mutual fund route. Please mind my words. Now, they have even specified, is it SEBI, is it RBI? Okay, let's say regulators, all of them put together. Basically, we can't invest. But so each mutual fund also has a limit beyond which they cannot invest at the moment. And as an industry, also there is a limit. So there are a few mutual funds which have their gates open. Okay. But it's a limit thing, right? It's a flexible thing. It can increase the limit, they can decrease the limit, they can open the gate, they can shut the gate. But this is all just now, because I don't think the government is now in a situation to control too much. Because if you control this area, there are other 5 places which are open. So if dollars have to move out of India, you cannot stop them from moving out. Okay, you can put a little bit of a cap on mutual funds, but then there are a lot of other ways to move the dollars out, right? And actually, it's a conflict of sorts, because in mutual fund, we are putting a restriction. On the other side, in the gift city, all the mutual funds are registering themselves. And this is all outbound activity. So there are mutual funds which have already registered themselves in gift city. They have already made their products and people have started investing also, or they are going to invest, because products are ready, as I'm hearing. And you will soon see that mutual funds will come out one after the other for new fund offers registered in gift city, where we will invest in Indian rupees. They will convert our money to US dollars. The minimum, as you can see, is $5,000. And then they will invest that money wherever they plan to, according to the objectives of their scheme. So whether it's in America or Japan or whatever. So mutual fund route is open. Gift City route is opening in a very big way. Products are already done, like I said. So Gift City is a little bit of a question mark right now, where we don't know. We're not really sure, because process. I mean, they're also waiting, but it's almost like round the corner, and that round the corner is not even 6 months ahead. It's just like probably 6 weeks ahead, that way. So mutual funds already active, ETFs already active. ETFs you can buy on the Indian stock market. Now the unfortunate bit is there are not too many ETFs for us to buy here. I mean, there is just very limited. There are some American ones. There's Hang Seng ETFs. These are some of the things that we can buy if we want to, but there is a limitation here also. But what is now very interesting is via USA. Now this is really interesting. Okay, and everybody must really pay attention to this area. Via USA. Now, how do you do via USA? So I will just explain something for a moment. Okay, can you please bring back the presentation? Okay, there it is. So the way you have an account with an Indian broker, let us say, I mean, I'm just taking some names, ICICIdirect.com, HDFC Securities hai, ya Kotak hai, ya Anand Rathi, ya Prabhudas Lilladher. These are all brokers in India. Zerodha, Grow, Upstocks. These are discount brokers, right? So the way you have a demat account with any of these brokers and you're buying and selling your Indian shares, some of these brokers are also giving you the facility to invest in American stocks, or basically, let's say it is access to American stock market and European stock markets, correct? Now imagine you have your phone. In your phone, you have an app. In your app, the way you are transacting in the Indian market by going to your HDFC Securities or ICICI Direct, you imagine you can do the same thing in US market. Okay, the issue is that you'll have to do it in the night, because the US market will open at 7 o'clock in the evening as far as Indian timing is concerned. What time difference ho jayega? But you can put orders in advance. You can say orders good for the day. So before sleeping, you can just put an order. I want to buy so and so stocks at market price or this dollar price or whatever it is. It's super easy. If you understand how to buy stocks through your app in your phone, through HDFC, ICICI, etc., it's exactly the same. It's just that the name of the companies are different. The name of the companies, obviously, the American companies are Google and Microsoft and Amazon as the leaders. And then there are all the other companies that are listed in the American market. Now comes the very interesting angle. Remember at the beginning of the presentation, I said there are 6,500. How many ETFs were there? 6,500 ETFs? Thousands of ETFs, okay? Now, just the way Indian ETF is available in the American stock market, all the other countries' ETFs will also be available on the American stock market, correct? So American stock market for you is a gateway. So for you and me, it's a gateway. We can invest in, say, Hungary or Greece or Spain or wherever we want to, through the American account, demat account that we will have. And these demat accounts are offered by who? Our known brokers. I mean, all the people who are around us, our Indian institutions have started offering you this platform where you can now buy securities listed on the American stock markets, Dow Jones, NYSE, and NASDAQ, which means it pretty much covers pretty much everything in the world that you want to possibly invest in. Can you come back? So that is like a very simple, easy facility. Okay, here these brokers are not even asking you to do any minimums. You can invest as low as $500 also. Okay, I mean, it's up to you. You can even invest $200. But now it's not really worthwhile if you're going to invest a very small amount of money. You should think about it like a strategy that I want to have so much percentage of my money maybe invest. Achha, by the way, when you have this percentage of money invested, your money is also invested. You have converted your Indian rupees into US dollars or into euros, and your investment is in a foreign currency. So you're not even then worried about the depreciation of the rupee. Right now, Indian rupee is almost kind of depreciated to about 87, 88. We've had a rapid move from that 84, 85 levels to about 88 levels. I mean, that always happens, especially when there is a little bit of uncertainty and turbulence. So right now, it is the tariff turbulence that is going on. So our rupee has kind of depreciated a little bit. But if you were in dollars, then you're not worried about that depreciation. So, I mean, in stocks, I would say that, okay, maybe think about at least $10,000, $20,000, $30,000. But, open an account with some of these Indian brokers and you can do this. Data and information, like I said, is freely available. Just the way you have Indian data, you can have American data also available. Someday we will do a little talk on how to find good, interesting things in America. But I mean, that's not our objective. It is only our objective here in this forum is to provide ideas on the table. So that's what we're doing. Okay, remember those thousands of ETFs listed? Now, this is the beauty of it, right? So, see, you may not know which stock to buy. See, as an investor, we have to do a lot of research to figure out, even a company like Google, Microsoft, Apple, etc., that there will be a good time, there will be a bad time for that company. How do you know that this is a good time? Unless you want to marry the stock, you want to invest in it and then stay with the stock for 20 years. But then that growth is not the real growth that you see will not be possible. If you, again, it's the same logic. Indian companies will buy the best of the blue chips and then you are invested for 5 years, 10 years, 15 years, sometimes no return. Same thing can happen in America also. But if you buy these ETFs, right? So these ETFs are ready-made portfolios, indices, strategies that are made by a lot of intelligent people there. And you buy that in that particular ETF or in that particular index or in that fund, the fund manager is doing whatever he wants to do, buying the right thing, buying the good thing. We just have to buy a good idea. So imagine if we, even as low as $500, we just bought the ETF listed in America, we can pretty much have access to, literally most countries around the world. Very, very powerful way of being able to take advantage of the global market and, the whole world that is available to us at the click of a button. So the presentation has gone beyond what I thought. But yeah, these are things that I wanted to talk about. And what we will do is let's sort of close this presentation.